Well, good afternoon, Maverick traders. Joe with you here. Let's get into a currency recap for the 27th of February. It is Thursday, ending our month here. And boy, it's been pretty fun. I've got my 2 cents. You guys know how this works. Make sure that you take responsibility for the outcome. Let's get into the meaningful news of the day. I'm going to break some stuff down technically, and if I've got some trades to share, of course I will, with the community.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, a pretty big day today when it comes to the U.S. equities, and a little bit of a carryover when it comes to some of the risk on and risk off currencies. So let's just jump straight into the news of the day. This could have been a very long list, so I'm just going to bulk it all together. U.S. equity markets move lower with continued tariff worries and action. And what I mean by that is we've seen continued pressure on imports when it comes to China. Trump administration saying that they might raise it another 10%. We're seeing the European Union being taxed, maybe starting with automobiles at first. We know these are probably going to implement themselves the beginning of April. We'll see if anything changes between then and now. But we actually saw a pretty good spike in oil. I'll get there in a second here, folks, based on an agreement that the U.S. had with Venezuela that might be no longer. So we have all sorts of push and pull going on and plenty of reasons for these markets to go up and down, along with the currencies as well. I think the biggest impact on the U.S. equities would be NVIDIA. So NVIDIA came out last night. They beat their earnings, but their stock moved lower on future worries and on where AI is going to go and if they can kind of compete with some of the other emerging companies. Now, what's really interesting is NVIDIA has also been this huge bellwether when it comes to AI in the U.S. And it wasn't specific to that, but it did have a pretty aggressive spillover. Well, real quick, folks, take a look at this chart. This is a heat map that we use on the equity side of things. But as you can see, NVIDIA, down over 8%, well, comfortably over 8%. But take a look at everything in the semiconductors area and the software applications. Everything kind of rolled over. AMD's down, Qualcomm's down, Micron's down. Salesforce in there actually had its earnings. It actually beat, but it was light on revenue. And the expectations of softness is the words used moving forward. So we are seeing a slowdown in unemployment numbers. We're a little higher. We know that we're seeing a lot of job cuts when it comes to federal jobs in the U.S. And so it's kind of this perfect storm. Communication, look at that. Amazon down, Tesla, Google, Meta. And these are all really large companies that do impact the overall markets themselves. But where it put us in a technical aspect is a little bit more ominous and bearish as we move forward. I figured you guys might think that chart's kind of fun. All right, let's get over to how we finished currency-wise. So the yen in the U.S. up, U.S. biggest mover up 0.82%. So it's more risk off, and you can see that Aussie and the New Zealand dollar continue to slide. So not a lot of change from the last couple of days. Rob May mentioned this and had some beautiful pairings between the two. Which have absolutely worked out. The problem that I'm faced with today is they've gone so diverse, it becomes difficult. I'd like to pair the yen with the Kiwi, but it's so far extended, it kind of takes things away. But everything in the middle has kind of floated just there. It was interesting to see the euro gave up a little bit, down 0.07. It's been hanging in there, and same with the pound as well, and the CAD kind of flat. The franc up a little bit. So it's just a little bit more of extreme of what we've seen over the last couple of days, and I do believe it was because of today's flush out, in the U.S. markets. I don't really want to say that the U.S. causes everything, but I know that the policy changes do affect how we interact with other countries, and I imagine that could be it. Let's take a look at the rest of the markets, or the overall markets here. The U.S. market, look at that, down 1.59%. If you guys take a look at an intraday chart, the S&P was absolutely flat until the last 2 hours of the day and absolutely just rolled over and spilled off. Same with the Dow, same with the Qs. It was just an overall sell-off, I believe, going into the close. We'll see what happens with that tomorrow. World Index down as well. Crypto dropped, gold down slightly, but that oil move to the upside, I think has a lot to do with maybe some of the the deal going on with the U.S.-Venezuela agreement. We'll see where that takes us. But it has been very tumultuous, to say the least. Bitcoin, what did it do? Well, slight drop in a couple of them. Litecoin hung in there. Ethereum dropped the most. But that's where they ended up today. We'll take a look at their charts as well. So my overall market outlook was very interesting. I've got a below the 20, below the 50. They're both sloping lower. The 20-50 slope, they haven't crossed yet, but the amount of drop that we've seen in the U.S. markets has really kind of pushed that. So it's easy for me to slide it down to a -2 because we did break a pretty significant support that we've been talking a little bit about it over the last little bit. It's right through this area here. This is kind of where I was saying, hey, that could be the make or break line. I believe that we're talking about the 59 area, back kind of where this gapped. But overall, I was thinking, hey, we had a pretty good shadow on this previous candle, and then the next day was another inside day. The shadow just came to the upside. So this is actually a pretty good sign of consolidation when you get two candles like this side by side. But for some reason, something came in. Once again, folks, I'm sure that you've probably got the news more than I do, but policy changes, updates, and it was just an absolute flush, closing pretty much on the lows. The volume, not overly strong, but it sure as heck wasn't weak. So that was a pretty good surge to the downside. Now, remember, folks, I showed you the heat map, and it was, I don't know if NVIDIA caused anything, but everybody that had anything to do with technology, the software, semiconductor, communication, just dumped it. So we'll see if that continues. But we are actually below a level to where, this is a little bit more substantial than a pullback. Now, we haven't broken down to a point to where this is an absolute bear trend. We still have a pretty good area here where this could be just a massive correction within a very sideways longer range. If you take a look at this on a weekly chart, folks, it's a little bit easier to absorb, but there is a lot of differences when it comes to what's moving in and out of sectors and a lot of speculation. And it's been interesting to see the amount of money that is being pushed in and out of some of these stocks based on that. So what do we got here? Let's take a look at some economic numbers. This is kind of what's happening. Trump comes out and he'll say something that he's going to do or where he's going. And he's been pretty consistent with that, with announcements based on some of the policy changes that are presented. Whether as soon as they're implemented, it could change some things, or if they're changed before they're implemented, we'll see. But there's definitely a lot of reaction going on. A couple of things that we can measure are like things like the unemployment claim. Now, the unemployment claim is increased. I believe that even the Fed was expecting a little bit of a stabilizing or slowing economy. However, it could be completely emphasized, or I should say overreacted to, because we know that we are seeing a lot of federal layoffs in some of with the policy changes going on in the U.S. Reaction is reaction, and it kind of is what it is. Now, the GDP preliminary number came in pretty much in line as expected. So, at least the economy's, it's showing that it's not expanding, it's slowing, and that's actually kind of good what the Fed kind of wanted to see. Now, I think all of a sudden this PCE number becomes a little bit more substantial. More importantly, if the Fed or Powell could actually come out and maybe comment on what that number is. But this is a very reactionary U.S. market. So just be aware that that's not going to stop anytime soon, folks. So let's take a look at the currency analysis, and you're going to see it's kind of more of the same. A lot of reaction and a lot of movement, but kind of in the same direction. As always, let's start with the yen, and the yen just continues to move higher. We've been talking about this for a little bit. I do like it. It's breaking above resistance levels. I'm just taking a look straight at velocity, folks, because really not a lot has changed. Everything that we've seen moving in the direction that we started with almost in the middle, or I say the beginning of the week, has pretty much stayed that way. So the yen continues to move higher. I do like how it's moving up and setting higher price action. This was a +3. I'm going to go ahead and just keep it there. We've got the SAR. That's kind of back and forth here, but the moving average, and I love the RSI showing a little bit of strength there. So we're going to keep the yen strong. Same with the US dollar. The US dollar has been weak overall as of late, kind of sideways, but this last little move to the upside, and I think that has a lot to do with what happened today. I mean, you can see in the last hour or so, it really just surged higher. What I like about it is it did break above a resistance level. We've got the RSI breaking higher. It turned the SAR and as well as kind of flipping it up. So I'm fine with the USD being at +3. You could keep it at a +2. That's fine. But it's the reaction. It's the emergence. It's the move to risk off that I find interesting, that we've seen the yen do for a while, but it looks like the dollar's participating now as well. Moving over to the franc actually did close a little bit higher. I do like it, a little bit of a high base. The moving average continues to stay kind of slightly higher. A flip-flop on the SAR, that's fine. Sideways on the RSI. I give the franc a +2, but it is also showing some strength as well. Moving over to the euro was a little bit stronger than we'd expect it to because it's not technically a risk on, neither is the pound. But it's holding true. So I moved the euro down a little bit. I think it was a +1. I moved it down to a 0. And it's because it's just got a little bit of a hesitation here. It's not breaking down. A little bit of a slide here on the RSI, but it looks like it wants to consolidate more than it wants to move lower. We'll see if that changes over the next day or so. The pound, a little bit stronger in the overall pattern. It's showing a RSI that's actually above an area. It's coming back down. But if it stays up in this area, I hate to punish it for it if it's coming down. I like the moving average and the flip on the SAR. More importantly, it's the price action that I'm after. So I like how it broke above that price action, is just kind of floating higher. So we'll see if that can't stay where it's at. But I'm going to keep that at a +2. Moving over to the CAD, you can see the CAD it showed some stability as it kind of moved sideways. I think we had this at a 0, and it looks like it had a little bit of a blip and then a move to the downside. But the CAD just kind of seems to meander at this area. So I'm not going to punish it too much, but I have to say that, hey, it's a downward moving average. We've got a RSI that's flat, well below that 50. And I mean, even though the SAR has flipped a little bit, it looks like it's more of a consolidation. So I went ahead and gave it a -1. I could also justify it as a 0 if you guys like that as well, but it's really not doing much right now. Let's move on. Let's get to the risk on currencies. So the Aussie and the Kiwi just rolled right over. The last couple of hours of U.S. markets, these rolled over. As quickly as the U.S. dollar moved higher, these rolled right down, almost in unison. So it was pretty easy to keep both at a -3. Here is the Kiwi. You can see it's almost the exact same pattern, a little lower below its support level, and it's just drifting further down. It makes it pretty difficult to take up the +3 against the -3 because we're way past it. Let's get through the cryptos real quick, and then I'll show you what I'm talking about on some of the comparisons with our currencies today. Here's Bitcoin. Bitcoin looks like it had a little bit of a bounce, but it looks like it's rolling back over. It has yet to break its support level, but I can't really be super happy about it. Now, I'm not going to keep it at a -3. I'll give it a -2 because it looks like it might be trying to build a support. We got a flattening RSI. Bitcoin Cash, a little stronger. And the reason being is I'm just giving it this little bit of a pivot point. So it moved a little bit higher, had a pivot point. So it set a higher low. But it's still kind of the same, same area. It's got a flattening moving average. Yeah, sure, the SAR flipped, and it looks like it's going to be more of a consolidation than trying to build its way back up. However, I did put it at a 0. Ethereum is moving lower. It looks like it tried to do the same thing that Bitcoin did, but this RSI is showing it's pretty much still out of favor. It was pretty easy to keep that one at a -3. I believe we had that there a couple of days ago with this nice break to the downside. Very anemic bear rally, which actually hit that resistance, and it looks like it wants to do it again. Now, that is a shadow there, so be slow to make that decision, but it looks pretty far out of favor. And then we'll finish up here with Litecoin. Litecoin had a pretty decent bounce. It's been interesting to see this thing kind of move against the others, but it's still not very strong. Now, I gave it a +1, and I had to because, look, we got the flip on the SAR, we got a moving RSI that actually went above 50 and is kind of sideways, but the moving average is just this smile, so I gave it a +1, but if it can actually kind of stabilize here and actually move higher, then I'm okay with that +1. But if it rolls right back over, it's just a volatile bear rally at that point. So here's the scoring that I got for today. A couple things moved up and down, right? The US dollar and the yen are still strong. The Aussie and the Kiwi are still weak. So they just continue to stretch both ways. The CAD slipped a little bit. The euro slipped a little bit. The pound jumped up a little bit. The franc pretty much jumped up a little bit. I'm not seeing a whole lot of divergence or any changes this week. Everything has just kind of started in one direction. They've kept going in light of the volatility that we've seen with at least U.S. policies. So what do I got when it comes to possible trades, folks? Well, they're going to be in the middle. I think the trades that Rob talked about the other day were fabulous. They all worked out, but right now I'm kind of left with stuff that's overextended. Well, let's take a look at what might be possible. So real quick, folks, I figured it'd be kind of interesting to take a look at, the strongest and weakest. So here's the yen Aussie. You could see that we kind of missed this. We missed as it broke. It looks like it's overextended. Now this could continue lower, but understand it might stabilize, it might flip, it might bounce. Let's take a look at the yen Kiwi. Kind of the same situation. I mean, these trades that were talked about a couple of days were great setups. Now they feel like they're a little bit overextended, right? So what am I left with? Well, I can do some inside stuff. I saw that the euro was holding in there, but it's starting to slide. However, the yen continues to show a lot of strength. So the first thing I wanted to take a look at, well, okay, if the yen can still hang in there, if there continues to be a risk-off move, I imagine that the euro might slide. Now, it's tough because it's not the weakest, right? I had the euro pretty much at a zero. But if it decides to continue if it can continue to get weak, then I've got this nice little breakdown here. So I do like the euro yen here, playing it short as it breaks down. So just make sure that you snap your target according to what you like and follow your rules. And I'd advise being a little bit quicker with it. The other trade I was looking at was the CAD against the franc, seeing that actually the franc's trying to play a risk-off currency and the CAD maybe continuing a little bit of weakness. I know they were actually back and forth, but I'm seeing a little bit more divergence in it. Same type of pattern that I just showed you with the other two, with the euro yen. But, just make sure, see if it can continue. Don't really shoot for the moon on these things, folks. Just, snap the Fibonacci's, get yourself whatever your target is, follow your plan, and make sure that you're adjusting your stops accordingly. Oh boy, because these markets can be reactionary. Just make sure you're comfortable with whatever trade you want to take and follow your plan. Well, that's pretty much all I got for today, folks. U.S. policy changes, it will continue to impact currencies. I don't know what's going to come out tomorrow, the next day. I don't know what changes are going to happen. I don't know if there's going to be negotiations between these countries or what's going on, but we are definitely seeing some reaction to it. So we're still in a very reactionary situation, and there's opportunity, but it's going to be shorter term. Just make sure that you play that relative strength and weakness. Now, they get too far apart, like we saw with the risk on, risk off. You don't want to chase it, but there are opportunities in between there. Just make sure that you are position sizing correctly and following your plan accordingly. All right, guys, that's what I got. Thanks for joining me, and we'll talk to you next time. See ya.